You make decent money. Not billionaire money, not private jet money, but good money. Maybe $90,000, maybe $120,000, maybe more. And every month you tell yourself, okay, this is the year I get serious. You open your banking app. You see subscriptions you forgot about. You see random Amazon purchases. You see dinners that were just this one. And somehow the month ends again. And your investment account? It's sitting there with $18,432. You were supposed to be further. You feel behind. You're not broke, but you're not building wealth either. And the worst part? You're investing something. Just not enough to change your life. If that hit a little too close to home, good. Because today, we're breaking down a very specific strategy. The $2,000 monthly investment strategy that builds $1 million faster than you think. And here's the thing. It's not about some secret stock. It's not about crypto. It's not about timing the market. It's about math and psychology and structure. And once you see how it works, you can't unsee it. My name is Mike, and I spend way too much time thinking about how ordinary income turns into extraordinary wealth. If you're someone who earns decent money but still feels like you're not getting ahead fast enough, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. Look, most people believe you need one of three things to become a millionaire: a huge salary, a business exit, a lucky investment. And that belief is exactly why they don't get there. Because here's what most people don't realize. Becoming a millionaire is less about intensity and more about consistency applied at a serious level. And $2,000 a month? That's where this gets powerful. Let's strip away emotion. Let's just look at numbers. If you invest $2,000 per month, that's $24,000 per year. Now let's assume a long-term average return of 8% annually. Why 8%? Because historically, the S&P 500 has returned about 10% annually before inflation over long periods. Adjusting for inflation and being conservative, 7-8% is a realistic long-term expectation. Now let's do the math. If you invest $2,000 per month at 8%, in 10 years to $365,000, in 15 years to $700,000, in 17 years to $870,000, in 18 years to $955,000, in 19 years to $1,040,000. Let that sink in. 19 years, that's it. And that assumes no raises, no increased contributions, no outperformance, no side hustle boot, just disciplined investing. This is where it gets really interesting. If you increase it to $2,500 per month, you hit $1 million in about 16-17 years. That's a 3-year acceleration from just $500 more per month. And here's the uncomfortable truth. Most people earning six figures could invest $2,000 per month. They just don't. Now, you might be thinking, Mike, $2,000 a month is a lot. And you're right. It feels like a lot. But here's the thing. It's not the amount that stops people. It's the identity shift required. Because $2,000 per month means driving the car one tier below what you could afford, living in a house slightly under your budget, saying no to lifestyle creep. And lifestyle creep, that's the silent killer. According to data from the Bureau of Labor Statistics, spending tends to rise almost in proportion to income increases, which means raises don't create wealth. They create bigger expenses. Here's what most people don't realize. Wealth is built in the gap between what you earn and what you upgrade. And $2,000 per month forces you to protect that gap. Let's break this into actionable steps. Step 1. Automate the $2,000. This cannot rely on willpower. Willpower is unreliable. Your investment must leave your checking account automatically within 24-48 hours of payday, not at the end of the month. Not if there's extra. First, you pay your future self first. Step 2. Keep it boring. I know that's not sexy, but boring works. A simple portfolio, broad market index fund, like an S&P 500 index, total market index, maybe international exposure, low fees, no constant trading. According to Dalbar studies, the average investor dramatically underperforms the market because of emotional buying and selling. They panic sell in downturn. They chase hype in bull markets. You avoid that. You stay systematic. Step 3. Increase it with raises. Here's where acceleration happens. Let's say you start at $2,000 per month. You get a $10,000 raise. After tax, taxes, maybe that's $7,000 extra annually. Instead of upgrading your lifestyle, increase your contribution to $2,500 per month. Now your million timeline drops. This is the compounding accelerator. Here's something fascinating. Investing $200 per month feels optional. Investing $500 feels responsible. Investing $2,000 feels serious. It changes your identity. It moves you from I'm saving to I'm building wealth. That shift matters. Behavioral finance research shows that identity-based habits stick more than outcome-based goals. When you see yourself as an investor, you make different decisions. You spend differently. You think long-term. Here's what blows people's mind. In the first 5 years, it feels slow, painfully slow. After 5 years at $2,000 month and 8% returns, you'll have around $150,000. You invested $120,000. You earned $30,000. It doesn't feel magical, but between years 15 and 19, compounding goes vertical. Your portfolio might grow $70,000, $90,000 per year without you increasing contributions. That's more than many people invest annually. This is where it gets really interesting. At some point, your money starts earning more than you, and that's the inflection point. That's when wealth feels real. Mike, what if the market crashes? It will, multiple times. Historically, the market has experienced declines of 20% or more, about once every 4-6 years, and yet, over long periods, it trends upward. If anything, crashes help long-term investors because your $2,000 buys more shares. Mike, what if I lose my job? That's why you build a 3-6-month emergency fund first. This strategy assumes stability, not recklessness. Mike, I'm starting at 40. Is it too late? No. At 40, 19 years takes you to 59. That's not too late. And if you're 30, you're ahead. If you're 25, you're dangerous. Now here's the deeper question. Can you afford $2,000 per month? If you make $100,000 and take home $6,000 per month, that's 1/3 of your income. Aggressive, but possible. If you make $150,000, very realistic. If you make $70,000, it may require side income. And this is where it gets honest. Sometimes the answer isn't cut more. Sometimes the answer is earn more, skill up, negotiate, build something. Because wealth building isn't just about investing. It's about increasing capacity. Now let's zoom out. Why $1 million? Because at a 4% withdrawal rate, $1 million can generate $40,000 per year. That's not yacht money, but combined with Social Security, a paid-off home, maybe part-time income, it's freedom, it's optionality, it's breathing room. And if you continue investing past $1 million, that's where real flexibility appears. Look, here's the truth. The first few years feel boring, but around year 8 or 9, you start seeing $200,000, $300,000. That's when anxiety drops. That's when you stop panicking about every bill. That's when work becomes less desperate. Money doesn't buy happiness, but it buys space, and space changes everything. Here's what most people don't realize. You don't need a perfect strategy. You need a committed one. $2,000 per month, invested consistently at reasonable returns for 17-19 years, builds $1 million. Not through hype, not through guessing, through discipline, through identity, through math. And here's the real question. If you're capable of earning enough to invest $2,000 per month, why wouldn't you? Look, future you is either going to be grateful or frustrated. The difference? A system. So here's your move. Calculate your current monthly investment amount. Identify the gap to $2,000. Close that gap over the next 12 months. Automate it. And once you do, stop obsessing. Let time do its job. If this helped you think differently about your money, hit subscribe, because we don't just talk about getting rich here. We talk about getting free. And I'll see you in the next one.